Most traders don't lose money because their idea of a stock is necessarily bad. They lose money because they enter the trade at the worst possible place on the chart. So they buy after the move has already happened instead of entering near support where the risk is low. So over the last few years, I spent a lot of time studying technical analysis, trading a momentum strategy, reviewing charts in our community, and I see the same mistake all the time. So in this video, I'm going to show you why this happens and a simple shift that started changing my trading once I understood where buyers actually step in. So that's really important to understand. So a common pattern sort of looks like this. Stock runs up, momentum looks strong, everyone is talking about it. A beginner buys the move and then the stock immediately pulls back. So it's happened to a lot of beginners. It's happened to me in the past. So the problem is not always that it's a bad stock, bad investment. The problem is where the trade was entered. So why this happens is basically most beginners, they naturally buy after the move has already happened. And this occurs when you buy a resistance zone on a chart. So a resistance zone is where earlier buyers may be taking profits. It's where sellers sort of step in, and often the price pauses or pulls back in a resistance zone. So if you don't know how to identify resistance, then it's easily to accidentally buy here. So if you don't know how to read a price chart, if you've never looked at a stock chart and you just make an investment, you might be buying at the worst possible place at a resistance zone. So let's jump over to the chart and we can just view what resistance actually is. So here is a chart of a stock called Iron that has been popular over the last several months, and it's come up to a resistance zone. So I'm going to show you a few things on the stock chart right here, some tools that we use. Now, below this video, you can actually find a link in the description, the first one, where you can come and join this Stock Trading for Beginners group on School. Every week we have a Q&A session that's live where you can ask questions. And actually in the classroom, there's the Momentum Trading Kickstart course. And in this course that you can take for absolutely free, in Module 3, we talk about technical analysis and we cover all of the tools that I'm going to show in this video. So certainly consider come joining our community. It's free. You can find a link below this video. So here's Iron. A lot of people got interested in Iron at the sort of fall of 2025 when everything was running up. And, a lot of people may have bought into this zone. So if we put on some simple tools like a fib retracement, what we will see is that right at 69.72, right at that range there, we have a fib extension, the 1.272. And basically what that is just an area of resistance. Prices underneath this area, and many buyers or sellers are going to sell. They're going to take profits here. Other sellers are going to step in and maybe short the stock. So this is a zone of resistance, an area where you certainly don't want to buy. So the stock ran up, a couple 100%. And if you bought here at, around $70, not knowing that was resistance, the stock has pulled back, over 50%. So, many beginners buy here and then they're down 50%. And the reason is that they've bought resistance. So that's just one tool. You want to use some other tools for confluence. So if we also put on what's called a Gann square, then we can also see that there are some of these Gann arcs in and around this range. So what this means is that there's some market symmetry in this zone telling us that the price is going to react. It's going to do something here. And certainly it stalled and it sort of didn't break through these arcs and it sort of back tested some of these other Gann angles. So right away, we can see that there's resistance in the high 60s. You shouldn't be buying this stock in that area. So where the best traders usually place their trades is what's called a support zone. So instead of chasing a price higher, experienced traders often focus on a support zone. So a support zone is an area where buyers previously stepped in. It's an area where there's a higher probability that more buyers will step in. Thus, when the stock is retracing into those zones, buyers step in, the stock stabilizes and potentially goes up. So that's what a support zone is. And it's important that you understand that the best trades usually happen after a pullback, not a breakout. So if you miss the breakout, if you didn't buy lower, you want to wait for a pullback into a support zone. So if we just look at iron, then, based on these tools here, we have a horizontal line here, and that would be a potential support. Rather than buying here, you'd want to buy in the sort of mid 30s. And if we put on some other tools like simple moving averages and the Ichimoku cloud as well, we can see that, in the future, this 50-week moving average is going to come into this zone. We've got the cloud in that zone. We've got a bit more confluence that this is support. The probability that buyers step in is much higher here than it is up here. And we can look at various other charts as well. This is Hood, where we've got some potential support at the bottom of this cloud, previous resistance flipping to support. We've got some fibs. We've got a 100-week moving average. So this support zone is much better than buying anything overextended up here. And you can look at many stocks are exhibiting that they were up at resistance in the late 2025 timeframe, and they've retraced back into what's potentially a support zone. You've got a fib, you've got this Ichimoku cloud, you've got the 100-week moving average. You've got a support zone here where the probability that buyers step in here is much higher, and your risk to reward ratio is better entering here as opposed to entering in this zone. So you want to buy and enter at support. That's where other buyers are going to also enter, and the probability that the stock goes higher is in your favor. So support, it's rarely one price, as we sort of highlighted on those charts. It's very much a zone where multiple signals align, and we call that confluence. So you can use multiple technical analysis tools to highlight the zone, and if many of them line up, then that's more confluence. It's a better probability that the price stabilizes and continues higher. So some examples that I kind of mentioned there on the chart: previous resistance flipping to support, a moving average, a fib retracement level, the Ichimoku cloud and its various indicators, and the GAN levels with that tool. So when several things line up in one area, the probability of reaction increases, and that's what you want. So we kind of looked at that with those charts there. So the simple shift that helped me to make this much easier was that instead of chasing strength, I just started focusing on buying support. So before entering a trade, I would ask, some simple questions. Is the overall market structure bullish? Is the price near support? And is there confluence suggesting that more buyers are going to step in? So, if those conditions are met, then the trade has a better probability of working out for you. And if you can't sort of answer these, then you should probably move on and analyze another stock. So the skill that a lot of traders, I think, really need to develop is patience, especially with this strategy. Most people think that they always need to be in a trade, make a trade. But once you wait for support, you're going to realize that you don't need to trade constantly. You just need to trade in the right place on the chart. So when I review trades from people in our community, it's clear that people don't lack an understanding of the strategy or how to use technical indicators. They just lack some structure around their entries. So once you start focusing on bullish structure, support zones, and confluence, then trading tends to become more calm, more planned, and just easier to manage. So just to recap this video, most traders, they buy at the wrong time for 3 reasons. They chase price after a big move. They don't recognize resistance zones on a chart, and they enter trades without some sort of clear framework. So once you start focusing on those things, I think trading is going to become much easier, much more systematic, and less emotional as well. So if you found this useful and you'd like to come join our free community on School, you can find a link, the first one in the description. It's school, skool.com/trading. And again, it's a free community where we have Q&A sessions. And in the classroom, we have a full course that goes over this exact strategy that I personally use. So we'd love to have you there. And I look forward to chatting with you in the next video.